Johnson & Johnson out with its numbers this morning and getting a lot of attention. Its forecast decrease. The company now anticipating earnings per share of $10.15 to $10.35 for the full year. The company also talking about that it is suspending its guidance in terms of vaccine sales. Let's talk more about all of this with Johnson & Johnson Chief Financial Officer Joe Wolk, and Yahoo Finance's Anjali Kamlani is back with us as well. Joe, it's good to see you. Good morning. I want to start on that forecast because I know on the conference call you guys talked a little bit about that the decrease to the forecast is due primarily, if not exclusively, to currency effects. Can you walk us through that?
Yeah, good morning. Happy to be here with you, Julie. You have it exactly right. It is exclusively due to foreign exchange rates and how the U.S. dollar has strengthened. We obviously know that the Federal Reserve here in the U.S. has tapered their balance sheet. They're raising rates. Other treasuries around the globe have not yet done that. So we've seen a very prolific strengthening of the dollar over the last 3 months from when we gave guidance in January. But the good news is, and really the results of a very, very solid first quarter with all the macroeconomic effects, the business at Johnson & Johnson remains very strong. We've maintained our adjusted operational guidance on the bottom line as well as the top line for our core business. And we just think it's very emblematic of just the breadth and depth of Johnson & Johnson.
Joe, Brian here. You mentioned on the earnings release that you saw a COVID supply surplus. How severe is that surplus?
Yeah, it's hard to say, Brian. Right now, it's actually a good news story for society. So as manufacturers ramped up supply in the second half of last year and folks would become vaccinated in the developed world, we saw donations being made to developing countries. Unfortunately, their infrastructure in terms of refrigeration, administration of getting shots in arms just isn't as robust. And so you saw a little bit of a backlog where some of the advanced purchase agreements that we had in place, those customers said, can you defer some of the receipt of vaccines to another quarter? So by suspending guidance, we always endeavor in any of our earnings calls to be very transparent as to what we know, but also importantly as to what we don't know. We've never really provided sales forecasts for an individual product historically in our company. There was a point in time last year where it made sense because there were, I'll say, intangibles of interest with respect to a pandemic and the vaccines and how quickly the pandemic may moderate. We think that time has passed, and we're going to have investors really focus on what's driving the current and future value of Johnson & Johnson, and that's the strength and breadth of our portfolio.
Joe, Anjali here. Really good to talk to you again. I want to follow up on that and really focus on what it is that you're seeing in terms of the production for this vaccine, because now with that surplus out there and the way the guidance keeps coming down from the CDC and FDA for boosters and the mix and match conversation, it just seems like there's a lot of pressure on the vaccine itself, not just here, but globally. Do you feel like you might be maybe slowing down manufacturing or ending it altogether?
Anjali, with any product, we always look at demand and relative to our manufacturing capacity. So this will be no different. I'm sure other companies who manufacture vaccines will say the same. We continue to look at that. But in your question is a very astute observation with respect to vaccine hesitancy. We know that, by and large, people were generally receptive to receiving a vaccine in the developed world. That is not necessarily the case in the developing countries. So that is also a consideration as we look forward to demand.
Speaking of what's going on globally, I know that the constraints on supply chain is also an issue. So talk about that, especially when you're talking about consumer health. I know that area is splitting off from the company, into two separate companies. So how do you see that impact in the near future?
Yeah, with respect to the consumer health separation, worth mentioning just the fantastic job the team is doing. It's very detailed work, but we have as much enthusiasm, if not much more conviction, that this was the right strategic and financial value creation decision to make when we announced it in November. We feel much more confident today. We are seeing great performance in our consumer unit in over-the-counter medicines. So think Tylenol, Motrin, Zyrtec, market-leading positions that are being solidified and getting even stronger. There are commodity constraints, scarcity, as well as some inflationary pressures with respect to our skin health and beauty segment. The good news is the point of sale demand remains very, very strong. So when we have product on the shelf, it's not there for long because customers and consumers continue to value and purchase it. We just need more of those products on the shelf. we had the chance to speak with the analyst community just a few minutes ago, and we had the opportunity to inform them that we see that situation abating in the second quarter and then hopefully even abating more in the second half of this year. So we would expect that the skin health beauty franchise would continue an upward trend as we progress throughout 2022. It's not something we can take for granted, as we know, and the inflationary pressures have lasted maybe a little bit longer than what any of us have anticipated. So we'll continue to monitor the situation, but we think we're pretty well poised based on what we know today.
So that's interesting, Joe, that you expect things to get a little bit better from here. Does that go both for the supply chain issues and the inflation issues?
I would hope so, Julie. You know, I think with some of these supply chain issues, it's really twofold for us. There's the inflationary cost, and then there's also the scarcity of supply. The scarcity of supply was something we saw coming in the third quarter of last year around some products, and our procurement team, our supply chain team, have been masterful in moderating really the impact of that. So that's why we are pretty optimistic on that component of supply chain constraints. With inflationary pressures, you know, it's really anybody's guess. We saw a record high number here just a few weeks ago reported by the U.S. government. It's hard to say whether that's a tipping point or not. We do have some price elasticity in our consumer unit, so not making up all of the cost increases, but some of them, just as our peer set has done in that category.
Joe, I just want to go back to something Anjali was talking about, just the production of the COVID-19 vaccine. Just given the waning sales of it, do you have a timeline on when J&J may no longer producing COVID-19 vaccines?
Right now, Brian, you know, we're very proud of the impact that we had to help end the pandemic. There are many more tools out there today. We're going to continue to evaluate it like we would an oncology or immunology drug and really base our production levels on demand. I do think there is a place for our vaccine, as we saw with recent CDC information that was published over the weekend, just how robust and durable our vaccine is. So we think that plays particularly well in the developing world. We'll have to see how the virus itself plays out, too. As we see newer strains, they seem to be less severe, which is obviously very good news, but that's also a factor that has to be taken into consideration.
Well, Joe, on that front, looking at the outlook for the vaccine, where do you see that? What are you planning in terms of how much pressure that still puts on the company and its products, especially when we talk about, you know, what you saw during the surge and the impact on medical products?
Yeah, specific to the COVID-19 vaccine, Anjali?
No, just the virus itself on overall.
So that's it's a dynamic, I think, that's going to continue to play out through 2022. In the first month of this year, January, we saw the Omicron variant was very prevalent in North America. The nice news is we saw both in med tech as well as pharmaceuticals, physician visits, hospital visits, activity, new scripts, that got stronger as the quarter went on. So stronger in February, very strong in the back half of March. Now we have to concern ourselves and look over to Asia and China specifically, where we've seen a surge of some cases with COVID-19. We have the largest med tech company in that country. And so it's something we continue to monitor. But I think, it speaks to the breadth and depth of Johnson & Johnson. We're going to try to manage these outbreaks with the breadth of our portfolio and the level of resourcing that we have.
All right, let's leave it there for now. J&J CFO Joe Wolk, always good to see you. Good to see you as well, Anjali Kamlani.